Hello traders, welcome to the LFB and our global video charting review for the commodity market weekly wrap, which is for the 13th of May 2011. We would ask that you pause the video, read the disclaimer and accept what's written there before taking anything from the video. The news wires are fairly quiet in regard to bullion, gold and silver and West Texas Intermediate oil trade at the moment. During the course of this week, traders had to absorb further margin requirements to hold physical spot silver and spot gold positions, and apparently the CME, Chicago Mercantile Exchange, had implemented the increases in margin requirements, which were followed subsequently by the Hong Kong exchanges as well, in order to stop or limit the amount of speculative interest that was building in the bullion markets. Seems strange that you would attach increased margin requirements, 8 margin requirements that came in a couple of week time frame, when bullion markets are collapsing as well, which gold and silver had done. West Texas Intermediate still got a little bit of price pressure to the downside because of the amount of US oil inventories far above the expected reads, and also still on the other side of that could create support for West Texas Intermediate and crude oil is the question marks on the civil unrest within the Middle East. As we go into next week, there's a very quiet economic and newswire docket for gold, silver and oil markets, so we will be concentrating a little bit more on the technical aspect. We're going to take a look at the technical reviews on the currencies and the commodities and the equities in the range of charts that we review. We're going to look at the commodity charts near term, see what signals are being generated, and then we'll take a look at the weekly price points. Looking at the charts on spot gold on top and the GLD, which is the exchange traded fund for gold. And we've got to understand as traders, when spot gold prices move, when gold bullion prices move, there is a delay in transposing that into GLD, the exchange traded fund movement. And the reason is the exchange traded fund basically is a 9 to 5 type of product. It can be accessed at 8 o'clock East Coast time through to 8 o'clock in the evening, but it does tend to be a little bit volatile in that time period. But we are looking at gaps as well. When you trade GLD, gaps happen quite often as the flow of orders that run through the commodity, the spot price, then have to wait until 9 o'clock, 9:30 East Coast time to start to get a flow of momentum. But as we can see, the lower price action that happened the end of April and found support on the 5th of May, spot prices moved higher. GLD took a little while to pick up the movement, but then as we've seen in the spot price on the recent drop, where gold dropped in the futures market down to 1475, GLD didn't really pick that up, and the reason is the drop happened in the overnight session, the futures market session, and was partly reversed by the time the futures market opened up for trade numbers to then be transposed into the cash market for ETFs. Got a beautiful looking weekly chart on gold bullion. Absolutely fantastic looking weekly chart that shows very bullish undertones. If you are not already in the gold market, now might not be a time to be looking to buy at these levels. We do need to probably just push back down a little bit on gold before you would look to buy again. But the buy the dip policy really is working very, very well. Near-term charts just showed us a dip that again got bought. We saw the reversal lower, which was the bullion update that had margin requirements hit the screens during the course of this week. That created that initial drop lower. But once again, the support area was bought, and the daily client notes have been saying about the 1470 price point area being incredibly important to look for buying opportunities. So if you're not long gold yet and you do want to be, maybe you should wait just for a pullback to support and then go from there. Signals will come out to clients as that sets up. The weekly chart looks a little disjointed on silver, doesn't give a great view of what's just happened. This is the daily chart, and we can see the importance when we trade the consequences of futures market trade. And this is why a lot of people refuse to be in that futures market. The exposure to it can be extreme, and you have got the risk of getting deliverables, either silver, gold, or oil. You've got the cost of storage, the cost of carry, the cost of insurance. So the complexity of a futures market chart compared to the inconvenience and cost of holding that physical if you're going to be trading are worlds apart. What we look for as traders is the global futures market to indicate where momentum and sentiment is going, and then trade a regional market. Either trade if the silver market futures contract is moving higher, when the regional market opens, trade the SLV, exchange traded fund, or the minor sectors if you feel that the value in silver is as much as the miners as it is in the value of silver in the ground. Or to be able to access that 24-hour futures market, you would trade a currency against the dollar that matches the silver movement. And we cover that each day in the signals that we send out to say that the futures market has moved. The consequences of it are this: trade the ETF doing that, or trade the Forex alternative, which invariably does set up. If you get a signal on silver, you invariably will get a corresponding signal in a very liquid 24-hour currency trading setup. Now we have had this severe of a pullback. We are looking for consolidation, very much similar to what we had during the course of March at $35, and we would be looking for silver to start to build those movements back higher. Looking at the daily West Texas Intermediate chart, and we use West Texas Intermediate because of its high liquidity as a crude oil contract, and we've had a very similar look and feel to oil and the bullion markets for quite a while now. This pullback on oil was as much to do with the global commodity market selling bullion. Now we've just got that same type of feel that we have on the silver bullion chart, that we're just consolidating now around this March price point where we found support around 97.50. No reason to expect too much further pullback in West Texas Intermediate. We are looking for some consolidation as the week unwinds, and then we'll be looking at near-term charts going into next week.